All right, our Oklahoma City watchers, it says that we are live. Hopefully, the audio is coming through great. It was working before we came on. Today, we've got Tom Rosser and myself. We're going over Oklahoma investment property stuff because Bigger Pockets Podcast said that Oklahoma City is the next best place to invest your real estate money. So, who better to help us with all the financials than Tom Rosser? I don't know. Tom, how are you doing? How is your Boston Marathon training coming?
Training was great. Ran some miles this morning. Got to put some in tomorrow as well. Doing great on this kind of cloudy, dreary Wednesday afternoon in OKC.
Do you have a massage therapist come to your office and work out all of that horrible, gross running pain that you go through?
I don't.
They're the champion CrossFitters, at least on YouTube, they say that helps them. So I don't know if that's something you want to add to your recovery. Do you do the ice baths?
I don't. I have tried an ice bath, but I don't do it regularly. And I think those competitive CrossFitters are getting paid. I think they're,
getting paid to have the therapy done.
They're getting paid. Yeah, they're getting sponsored. They're getting paid. Yeah.
What do you think a shoe deal for them is? You think it's a $5 million shoe deal?
Ooh, I don't know. I'd like a shoe deal though, for sure.
Hey, sponsors out there, Tom Rosser will wear your gear in the marathon as long as Mr. Stitt says it's okay, right? Or is this an independent event?
Independent, totally independent event.
Guys, Tom Rosser, Gateway Mortgage, he's looking for sponsors. If you need some money, if you got to spend some money, definitely reach out to him. Tom, I'm really excited about this. You're the one who actually brought this to my attention about this investment thing. I'm just having to move some screens over so I can read it. So basically, the top 10 questions that people have when it comes to investment, we'll talk the real estate side of things and the loan side of things. Does loan matter, financing matter on location when it comes to investment properties?
No.
Would an investor get any special loan points, or would Gateway Mortgage get any special loan points if they went to a government targeted area to invest in when it comes to that, or does that not matter?
No, I mean, there's some incentives for primary residents purchasing in some of those areas, right? But I don't think there's incentives right now for investors to purchase in those areas.
Oh man, what about any Green New Deals? Are there any loan advantages when it comes to investing in houses with the Green New Deal?
No, not that I'm aware of.
All right. When it comes to location, guys, basically, on the real estate side of things, it really depends on: are you looking for cash flow, or are you looking for appreciation? Those are two big questions that you want to ask yourself, because the less a property costs, basic rent cost is going to be basic rent cost across the state. So what I mean by that is, like, you're basically looking at spending $800 to $1,500 minimum, no matter where you're looking. And then just depending on if you're more interested in cash flow or appreciation, because if you think another, we won't say last 2 years is going to go on, then the purchase price doesn't matter if you're going to see those types of appreciation rates. But if you don't think you're going to see those types of appreciation rates, then price will matter, especially if you're interested in cash flow. So location really determines that, because less expensive houses usually are in areas that have less expensive rent when you're looking at market houses. Does that make sense? Thumbs up. Thumbs up. Oh, sorry, Tom. What's that?
That makes perfect sense.
Awesome. What about when it comes to potential rental income? Does a potential rental income matter any for investment loans, Tom?
It does. So I'm going to start off by saying there's 3 ways to classify properties, Josh. I just want to get that out there. We classify properties primary residence, right? You live in it. It's your main house. Another way to classify a property is a second home. Second home traditionally is like a lake house, or a second home, a traditional second home. The guideline on second home is that you have complete control of that property all the time. And then the third way, kind of what we're talking about right now, is an investment property purchase. So just be sure we're clear on the classifications of those properties. And then projected rental income does play a part. So lots of times you'll say, hey, I have the money to buy an investment property, but I don't want to get stuck with 2 months payments, or maybe I don't have the income to cover both payments. can you give me projected rental income to offset that future rental payment? So the answer to that is yes. We're going to do an appraisal on every rental property that someone purchases, and we do an extra step called a 1007. It's a rent analysis, and we show what that property is supposed to rent for, what similar properties are renting for, and then we would give you credit for that projected rental income.
That 1007, how much extra does that cost?
It changes all the time. It can be $100. It can be $300.
And remember, guys, that 1007 is really, really difficult to fill out. If you've ever looked at appraisal documents or even looked at your appraisal, it's like 42 pages of a whole bunch of crap. So when you're like, what the hell do I got to pay $650 for this thing? Well, read it. Read it. If you and I tried to fill that out, I wouldn't finish it. I would have to VA it, send it to the Philippines to get it filled out. I wouldn't do it. But if you're not buying a property with cash and you're using someone else's money, like you're using a loan, that's just cost of doing business. Okay. So don't get upset when you're looking at $650, $750 appraisals nowadays. That's just part of the game. Is that right, Tom?
That's right. If farther out, it's going to cost you more money.
Oh, further out, meaning if the closing date's further out, or you think further out, meaning
I mean, like
prices always increase.
Appraisal will charge you a trip fee if the appraiser's got to drive a certain amount of mileage.
Yes. So, but just generally looking at the Oklahoma City Metro, they wouldn't charge a trip fee unless they were going to somewhere like maybe Shawnee. Does that sound right?
Absolutely.
Okay. And then El Reno and
South
Purcell.
Yeah. Absolutely.
Okay. Do they get trip fees on Guthrie, or is that still considered the Metro?
No, I don't think they're really negotiating Guthrie trip fees right now.
Okay. Just verifying. So on determining potential rental income, guys, you don't need a real estate agent to do that on my end of the things. On the real estate end of things, go to realtor.com and click the rental button at the top of the page and just look at what houses in the area in a 3-mile radius are renting for. Or go to that other website, Zillow or something, click the rental button and look at what houses are renting for in a 3-mile radius. That's going to be a great determination. And then always double check the rents per the school district. School districts have a lot of weight and value and how much you could charge people in rent in the Oklahoma City metro area. On the real estate side of things, does that kind of make sense? Thumbs up, guys. Thumbs up if it makes sense. All right, Tom. The process for finding a rental property loan. So the process for a rental property loan is going to be different than a home mortgage, or is it going to be more of a pain in the butt?
Same process. That's what I'll tell you. It's the same process. We're going to qualify you income, your credit, and your assets, just like we would if you were buying a primary residence. It's just the collateral, right, that you're buying. You're not going to live in it. So we're viewing the collateral a little bit differently, but as far as you as an individual, the process is very, very similar. You go through an application. We've got 3 ways to do that, right? You do that over the phone, you do that in person, or you do that online. Application comes to us. We will review credit. We'll get income documents. We'll get asset documents. And if you're approved, we'll issue an approval letter and go tell you to find a house. Whether that's a primary residence, a lake house, or an investment property, the process is very similar.
That's awesome to know, Tom. Now, let me ask you this. If I, for example's sake, had $600,000 house and I only owed $300,000 on it, so 80% of that, for guessing's sake, let's say it's $500,000. So would it be smarter for me to work with you on getting a cash out refi to go buy a rental property loan so that I could use tax benefits? And if this is an accounting question too, just say, I don't know, it's an accounting question, to take cash benefits to take primary house tax benefits from that loan to buy the rental property? Or is it better to get a rental property specific loan for tax purposes, because I basically get to depreciate the whole asset?
It's a tax question for sure.
Okay.
That's an accountant question for sure. But it's a good point that you bring up, which is down payment, right? Down payment's the biggest obstacle for someone to buy an investment property. And it's the most common question that we get. So on an investment property purchase, we require 20% down. You get a much better rate if you have 25% down. So how you come up with that money, it matters, right? Like there's no gifts allowed on an investment property purchase. So you can't have a gift from a family member like you can on a primary residence. And then the other thing that you're saying is, hey, can I get equity out of my current house and use that money for a down payment on an investment property? And the answer is absolutely yes. We do that all the time. We're just going to count the debt. You most likely got a loan to realize the equity of your house. You probably have a debt. We're going to count that debt against you. But it's absolutely possible.
Okay. And then for loan cost purposes too, like when I'm weighing, let's say it's only $150,000 investment property. For loan cost purposes, as an individual buying a first rental property, would the loan be more beneficial for me to get just an investment loan on the investment property if I've got the 25% down, or should I do the cash out refi and get the loan just on my primary residence? Is there going to be a difference in loan cost, if that makes sense? Like, is one loan $2,000 cheaper than the other?
Cost wise, there shouldn't be too much of a difference.
Okay.
But rate wise, there will be a difference. The rate on a cash out refinance will be different than the rate on an investment property purchase.
Okay. And guys, so with him saying that, if it's a 1% difference in rate and you're only talking about $150,000 rental property, that's only $1,500 annual difference. Is that right?
We'd have to get a calculator to get that math exactly. But yes, on a $150,000 purchase, rate doesn't make as big of difference on a big purchase. Right.
Okay. So you may not want an additional loan on your primary residence for whatever reason, for only an additional $1,500 a year savings. If we're just looking at, third grade level math, not like taxes, insurance, all that other stuff. So, right. Okay, that's good info. On the real estate side of things, let me go back to the question real quick. Determine potential rental income. What is the process? Okay, well, what is the process for getting a loan? Okay, so you talked about the process for getting a loan. Go on your website or get your app, or just fill out the loan app, and then in there you select this is going to be an investment property, and then in there does it ask the potential borrower how much they're going to be putting down during that loan app?
Oh yeah.
Okay, so if you've got the 25, put it down because it's cheaper.
Yeah, and I say put that down. You can put 20% down, and we show everybody the difference between 20% down and 25% down. No matter what. I mean, we'll just show you, hey, even if you can't come up with the extra 5%, we'll show it to you.
Okay, so don't feel locked in no matter what you put on that loan app, because you still got to have a meeting with Tom and the people at Gateway before you lock everything in.
Correct.
Okay, and the process for getting a rental property, guys, is just call us and tell us how much you want to spend. I mean, if you're a cash flow investor, if you're I want a deal investor, or if you're an appreciation investor, I'll just buy at market because I'd rather move this money in a 1031 exchange and put it in another property than deal with giving the money to Ukraine. You make that decision. Tell us what type of investor you are. If you're like, I want a deal investor, we'll say, great. What school district? You tell us the school district. We look at the average price per square foot for that school district, and then we cut that price per square foot down to 70%. And anything that pops up in the average price per square foot, that's 70% the average, we're going to say, hey, look, it's a deal. Do you want to buy it? And this is when you real estate investors actually show if you're an investor or not. Yeah, I'll buy it. It's a 70% off deal. I'll buy it. But if you're like, well, I think it's too much, guys, that's going to throw red flags on the real estate side of things. We're going to be like, it's 70% below the square market value average for the area. If this isn't a good enough deal for you, there might not be one. You might want to chase the obituaries or something like that, because a 70% below market deal, that's a deal. That's 30% off. So next question is, how much should I budget for renovations and upgrades? So Tom, can investors use their loan with you to do renovations and upgrades if they need to? Is there an investment home loan that allows for rehabbing?
Absolutely. Yeah. So there's rehab loans, and I would tell you, it just like if you're rehabbing a primary residence or a second home, to me, it just depends on the terms. So how much money do you need to borrow to rehab the house, and how quickly do you plan to pay back that money, right? So if it's a small rehab where it's small is relative, right? But if it's a small rehab, let's say it's a $5,000, we're going to fix up a powder bathroom or something. Do you want to spread that $5,000 out over 30 years and let me finance it with the whole thing? Now that's your decision, right? We can finance that. I may tell you, hey, that's not the best bet. For $5,000, there's other ways to get that rehab money.
A second job.
Save some money. Yeah, if it's a bigger rehab job, $30,000 kitchen, a $50,000, we're going to do this or that, then yeah, we absolutely look at including it into the loan. The most scenario, we're going to need 20% of total acquisition costs. So let's say that same deal, Josh, you're buying a $150,000 investment property, but it needs $30,000 worth of work. We just put those two together, and I want 20% of 180. Did I do that right?
Is that 36? You want 36 grand?
That's exactly right. That's your plus some closing costs.
Okay, and then does Gateway also offer signature loans to people? If like you said, they were just doing like a porch redo, a $3,500 porch redo, is that something that your branch can help them with?
Not at this branch, but I would imagine that our bank can. We got a bank, and our banking department could probably handle that.
Okay. So yeah, guys, and also everything that it comes with loans, rehabbing, investment properties, everything like this, also run it by a CPA, because the CPA might be like, absolutely add that in to the 30-year mortgage because you're going to depreciate it. So absolutely do that. It really you got to look at your own personal finances and your own investment goals when it comes to this stuff. So what I'm saying on how much should I budget for renovations and upgrades, guys, if it's habitable, if it's move-in ready, don't go deck it out. You're dealing with renters. Now, if you're buying a property for like luxury renters right downtown by the what are those basketball players called? The Thunders. Right by the Thunders place. If you're buying an upscale condo downtown just for people to stay there overnight because they're watching the Thunders, that's a different clientele. And yes, you would want to make that fancy as poo-poo. Make it fancy. But if you're just buying an investment property, $150,000 investment property, to park money, to get appreciation, to have tax benefits from it, verify with the CPA, if it's move-in ready, don't touch it. Don't touch it. If the carpet's old and gross, it's okay. Just wait till those renters move out. It's going to be older and grosser. Okay. Don't touch it. Don't spend money on it. Do the acquisition cost, do the loan cost, do the down payment, and then just write out the long-term asset. Okay. Don't go try to pour a brand new driveway because you got a crack down the middle. It's an investment property. Don't worry about it. Thumbs up on that, guys, on the real estate side of things. Tom, you got anything to add? Does that sound about right for real estate side of things?
Yes, it does.
Okay, number 6, Tom. Does my loan matter when it comes to my property managers? Or anything that I need to, as a real estate investor, is there anything that I need to make my lender aware of, Gateway Mortgage, do I need to make them aware of when it comes to property manager?
No. Nothing different there, right? If you're going to use a property manager, you just want to kind of vet them. And I don't know, what's the average right now for a property manager? 8 to 12% they're going to take off the top of the rent.
The cheaper you pay, the better service you get.
I don't know.
Yeah, that's a joke.
Yeah.
That's a joke, guys. If you beat a property manager up on their management fee, you better expect the worst service in the world. You're better off getting a property management app and just letting the app do it, guys. I'm serious about that. The more you beat up your server, the more spit you're going to eat in your food. I'm 100% serious about that. Okay, so mortgage wise, Tom, and I'm not trying to come up with crazy questions. I actually have these questions in my brain. you know how your mortgage requires that the investor maintain insurance on the property. Does it have any sort of weird clauses related to being an investment property, related to be a property manager? Like you don't need a bonded or insured property manager in your investment specific mortgages? And I'm serious. I'm not trying to come up with weird questions.
No, you don't. You've got to have insurance, right? We got to cover the dwelling. We've got some guidelines about what insurance coverages we require. The most common question we get from investors is regarding the deed, and changing the deed to an LLC after closing. Real common question is, can I deed it over to an LLC to remove some liability from myself? Now, there are some verbiage in our mortgage, in our note, that says we can call the note due if the deed is changed, right? And that is in the mortgage. It's in the note. It is still there. So I'm not going to say we won't do that. I can say through experience, I haven't seen us do that.
And Gateway services their own loans, so you would know about it right away.
We service our loans, right? We say that we service our loans, but we have sold loans in the past as well, right? So I will tell you, we service loans. We intend to service loans, but we've also sold loans. I've been kind of careful how I say that now, Josh.
Oh, that's true. That's true. Yeah. Yeah. That servicing fee adds up. And then on the real estate side of things, how you find a property manager, you just ask us. Just ask us. And then we're going to give you a list of people. You have to call them as the investor. You have to interview them as the investor. And you have to pick someone that you're going to click with. If you pick someone that you and their personalities don't match, it's not going to be a good relationship. You're signing a contract with them that they're in charge of a large asset of yours. So when you sign that contract with them, you better know, like, and trust them. You better get on their Facebook and look what they're posting. If they're saying that it's okay to have gender dysphoria, you may not be okay with that. So you got to look at them. You got to see who they are and see who you want to work with. Okay. I'm serious about that. And that's when it comes to anything. You guys don't go to churches you don't like. You guys don't go to clubs you don't like if it's Rotary or a country club or something like that. You guys go where there's people that are similar to you. That's the whole thing about being humans. We go in little cliques. So make sure that property manager is someone that you click with. If it's someone you don't click with, you're going to have issues. You're going to have a problem. And that contract you sign with them, it's a legal document. Seek an attorney's expertise when it comes to it. And if you want to give it a shot on your own, there's a ton of software out there that might be able to help you, but that's a liability risk that you got to weigh when it comes to picking property managers. So thumbs up if that makes sense. Thumbs up if that's helpful. And then 1, 2, 3, 4, 5. That's the first 5 questions for today, Tom. If you think that we're pretty good, because we can make this a 2-part series. We got 5 more questions for next week at 3:00 on Wednesday. Are there any little things that people need to think of before we let them go when it comes to investment financing, single family investment financing? And Gateway can do all the way up to 4 units per building financing, can't they?
Correct. 1 to 4. Yep. So duplexes, right? Buy a duplex, live in one side, rent out the other, and get some
house hacking.
Absolutely. One of the things I was thinking about getting this going, Josh, is the down payment is usually the biggest obstacle, right? 20% can be an overwhelming number. Well, there's other ways. Like I was thinking about who I work with right now that owns investment properties, but has never put 20% down on a home purchase, right? And I know there's a ton of them that we work with. And what they've done is they bought a primary residence with 5% down. They lived in it for a year or 2 or 3 or 4, whatever. And then they moved out and bought another primary residence with 5% down. And they just kept the first one and turned it into an investment property. So there are ways to get around the down payment challenge of buying an investment property. But yeah, that was it. I think we covered it.
Awesome, guys. So that's part 1 of a 2-part series. We'll be here next week with all your Oklahoma mortgage, home loan. You guys do land too, right? Investing loan, land loans, with all your questions. Bring your questions, guys. Don't just sit here and listen to Tom and I rattle. There's no questions showing up, and the Facebook feed is horrible. It's probably because I was talking bad about the State of the Union last night. But For all those watching on LinkedIn, Twitter, and YouTube, thank you guys so much. We really appreciate you stopping by here. For all your loan, your real estate loan needs, what's the best number they can reach you at, Tom?
405-751-3800 or gatewayokc.com.
That's awesome, guys. And for all your real estate needs, relocating to, move to, or moved in, give the agents at eXp Realty and I a call at 405-454-7853. I had to remember which phone number goes to this channel. 405-454-7853. Thanks so much, guys, and we'll see you guys next week.